Everybody thought that 2020 was going to be the crazy year in the economy and that things were going to go back to normal in 2021. But here we are in 2021 and we're still in a crazy economy, which is not so good news if you don't understand what's going on. But this is a great opportunity for the financially educated because this creates opportunity for you to create wealth. And that's what I'm going to be talking about in this video. What's up, everybody? I am Jaspreet Singh from theMinorityMindset.com, where money minds rethink rich. 2020 was a crazy year in the economy because not only did we see the entire country shut down, we saw money stop moving. The stock market tanked, interest rates were slashed, and everybody was just living inside of their homes. And so we saw some industries like the tech industry boom, and every other industry was on the verge of collapse. That's when we saw massive stimulus programs passed, and we saw lots of money printing, and we saw unlimited quantitative easing to kind of get the economy moving again. And then everybody thought, okay, 2020 was crazy, but 2021 will be the year where we go back to normal. But 2021 is anything but normal. We are in a strange economy. After we hit that recession in 2020, we have seen something called a K-shaped recovery. So you have, I'm gonna draw it in a couple different colors to really show you what's going on. You have a K-shaped recovery, which means that some people in this recovery are becoming poorer, while other people in this K-shaped recovery are becoming wealthier. Let me get my blue marker. And so what's happening is that people that are financially educated have been able to become wealthier during this recession or recovery, while other people that are not financially educated have become poorer through this recession and this recovery just because of either what industry you're working in or what you're doing with your money. Like if we just look at the tech industry compared to the restaurant industry, people who worked in the tech industry during this pandemic, well, chances are you might have gotten a bonus during this pandemic, because not only were you able to work through this entire pandemic because you could work from home, but you might have seen a boom in your industry because everybody was on their phones and everybody was on their computers. But if you worked in the restaurant industry, well, your restaurant might have got shut down and you might have lost your job, and you might not even have a job anymore if your restaurant doesn't exist. And so depending on what industry you worked in, you might have either seen a boom in your salary or you might have seen your salary go away. And it was the same thing with your money. People who came in and they started buying stocks when the stock market crashed in 2020, well, chances are you built a lot of wealth very quickly because we saw one of the fastest stock market drops and one of the fastest stock market recoveries ever during the 2020 pandemic crash and boom. And if you were one of the people that came in and sold when that stock market crash happened, well, you might have seen your wealth get cut in half because a lot of people panicked and they sold their entire life savings when the 2020 crash happened. And so now what we're seeing happen even more is we're seeing all this money printing happen, and all this money printing is diluting the value of our dollars. And so now your dollars don't stretch as far. They don't have as much buying power. This is causing more inflation, which means now your groceries are getting more expensive. Your rent is getting more expensive, your healthcare costs are getting more expensive, your vacations you want to buy are getting more expensive. And so now it is becoming more expensive to survive, and at the same time, wages are not really going up. I mean, we have a lot of industries where wages are actually going down. And so we're seeing this very strange economic recovery where we are going to see a bigger divide between the haves and the have-nots, which are now the financially educated and the financially illiterate, which is why it is more important than ever for you to understand money, because as this economy is going to continue to evolve, you want to make sure that you're on the right side of this equation. That way you have the resources and the education to take care of yourself, to take care of your family, and take care of your community, because you do not want to be one of the people that's relying on the government or someone else to take care of you. You want to understand money, that way you can build your own wealth and not rely on somebody else. And in this video, I'm going to be talking about how you can do that in 2021. Let me show you what I mean. So here's where we are right now at the time of me recording this video. Right now, we have millions of Americans out of a job. We have thousands and thousands of businesses that are permanently shut down, and these are permanent job losses. We have millions of Americans that are relying on unemployment checks in order to eat. We have millions of Americans that are relying on their stimulus check in order to pay their rent. We have millions of Americans still on forbearance on their mortgages, and this mortgage forbearance program keeps getting extended because people don't have money to pay their mortgages. We have millions of Americans that don't have money to pay their their rent. So we're seeing this eviction moratorium get extended. We have millions of Americans that do not have to pay student loan interest because the federal government says that people don't have money to pay interest on the student loans, so you don't have to pay it right now. And so we have all these people relying on the government to survive, but at the same time, our stock market is booming and the real estate market is soaring like never before. There's 4 different ways that I'm going to be talking about in this video that you can build your wealth. Real estate, stocks, gold, and crypto. You want to make sure you understand all 4 of these things, that way you understand the best way that you can use your money. But before I get into these 4 things, I need you to do me a quick favor and smash the thumbs up button below. And a quick word from our sponsor, Fundrise. If you are interested in investing in real estate, but you don't want to deal with the whole headache of buying actual physical properties, you can invest in crowdfunded real estate with Fundrise with as little as $1,000. So if you want to learn more and see how you can start investing with Fundrise, I got the link to how you can do that in the description below. Now, before we get into actually diving into real estate, the first thing that I need you to understand is actually 2 things. Is first, our cash is losing value quickly and is only going to continue losing value in the future because we're seeing all this money printing happening and we're seeing all this inflation happen. So the value of your dollars are being diluted. That's why $100 today doesn't have the same buying power that $100 did 10 years ago or 20 years ago or 50 years ago. So in 10 or 20 years, $100 is not going to buy you what $100 can today, which is why the thing that I want you to do is I want you to start converting your dollars into something with real value, real assets. Those are the things that I'm going to be talking about today. But on the flip side, the thing that I want you to kind of understand and balance is the risk associated with that, because everyone's worried about a market crash, a real estate crash, a stock market crash, a crypto crash. And so the worry people have is if I come in and I take all my cash and I go and I start buying stocks, I go buy real estate, I start buying crypto, and then we see a market crash happen, well, now my assets just got cut in half. And so yes, a market crash is also a risk. But the thing that I want you to understand is I want you to be a smart investor, because crashes and recessions are a risk of investing your money. I mean, you're never guaranteed to make money when you invest. You might even lose money. The thing that I want you to understand is how you can be a smart investor. That way you can find opportunities. That way, if things do go down, you understand what your strategy is, because either you understand that you're investing for the long term and you have good long-term investments that will ride through a market crash. And even if you want to be a short-term trader, I want you to understand what's going on in the markets. That way, if things start to shift, that way you can change what's going on in your portfolio. What we know for sure is that we saw a record amount of money printing in 2020 and 2021, and we have yet to see the real effect and cost of that. This is something that we're going to be paying for years into our future, and these are things that our kids and grandkids are going to be paying for. And so what you need to do is you need to understand what's going on and start using your money as a tool. That way you can use your money to buy something that will either at least hold its value or buy something that will make you more money. That way you can become wealthier as more inflation happens, because I mean, that's one of the only guarantees we have in this world, that inflation is going to continue to happen. Real estate is one of my favorite places to invest my money, because when I invest in real estate, I own something that I can see, feel, touch, and control. The way it works, as a kind of really brief overview, is I come in and I buy this house right here, and what I'm going to do is I'm not going to live in this house myself. I'm going to rent this house out to somebody else. So this guy with a really nice mustache, you know, and this lady right here with a braid, or as we say in my native language, Punjabi, a gut. So this really nice couple live in my house, and they're going to pay me, let's just say $1,100 a month, and every single month this money comes into my pocket, and in exchange of them paying rent, they get my beautiful home to live in. The reason I like real estate as an investment, because real estate investments are known as cash flow producing investments or assets. So when you buy real estate, you're producing cash flow. So you're making this $1,100 a month, and the whole idea is your expenses are going to be less than $1,100 a month. Let's say your expenses are $700 a month. So this might be your taxes, your insurance, your management fees, your maintenance fees, maybe your debt if you have any. And so every single month you got to pay $700. You're making $1,100 every single month, and so that $400 difference sits in your bank account, and so you have a positive cash flowing asset, and now you own something that has real value, right? Because your dollars at the end of the day are just paper. That's just a piece of paper or digits in your bank account, versus real estate is bricks, it's windows, it's land. So you have something physical, something tangible, something that has a real value, while dollars really don't. And so now real estate over time at least has real value, and you expect that real estate will hopefully appreciate. Now, this doesn't mean that real estate always goes straight up in price. I mean, you will see market cycles happen even in real estate, but you own a tangible asset and you own a cash flowing asset. So now you converted your dollars into a hard asset and you're making money every single month. Now let's get into actually investing in real estate in 2021, because investing in real estate in 2021 is unlike any other year. Right now in the real estate market, we are in something called a seller's market. Essentially what this means is we have a lot of buyers, but not that many sellers. And so buyers are having to fight against each other to find homes. And so sellers are able to sell their homes for top dollar and home prices keep going up. That's not good news for you if you want to be an investor, because you never want to be competing against other people to buy an investment property, because you don't want to overpay for an investment property. But there are still opportunities in the real estate world if you just understand how to look. The thing that I want you to understand here is that we have so many people trying to become homeowners because people want to take advantage of these low interest rates. But the thing is, when people want to be homeowners, they want to buy a nice, cute, move-in ready home. That is not a home that you want to be buying as an investment. And so the thing that you want to make sure you're doing is you want to make sure you're not competing against the whole world as you're trying to find investment properties, especially if you're looking for single family homes. I'll give you an example of what I mean. So over the last couple months or so, I made an offer on 4 different properties in one neighborhood. So all one area, all similar style homes, all similar sizes, but I got rejected on 3 of those offers and I only got accepted for 1. The reason is those 3 properties that I got rejected on were all pretty nice properties. They were all ready to go. And on all 3 of them, I made above asking price offers. I offered a few $1,000s above what the seller was looking for, but I got outbid on all 3 of them. The one property that I did get accepted for, I got this property way below market value, and I negotiated this property down another 10% below their asking price because this property needed some work. Now, I think I got this property, I got into contract to buy it for $110,000. And it might need like $10,000 worth of work, but this property is worth at least $150,000. Now, this is a great neighborhood. It's a great area where people are bidding up properties. There are some properties that are getting 20, 30, 40 offers in the first 72 hours of it just being on market. And this property that was a little bit beat up, it really wasn't that beat up, it was just cosmetic work, was a property where I could come in and buy it below what the seller was looking for and below what the market wants. So if you want to be investing in real estate in 2021, the first thing you got to understand is you don't want to get into this hype of trying to compete against crazy home buyers who want a home to live in, because you want to be investing in real estate as an investment and you want to make sure the numbers make sense for you. So if you're doing that, you might have to look for rougher properties. You might have to look for properties that need work, because right now this is just the market that we're in. Everybody wants to buy a home. And if you're competing against the whole world, well, you're going to overpay for the properties. You don't want to get into that game. If you can find a great deal, cool. But you don't want to get into the game of paying more than what makes sense for you. So you want to be crunching the numbers. Sure, maybe you got to make an above asking price offer depending on where the property is, if the numbers make sense. But if the numbers make sense, you don't want to get emotional and just start buying properties because everybody else is. You want to make sure the numbers make sense for you and if it's producing positive cash flow. Because if a property is producing positive cash flow and real estate prices do come down 20% or 30% or even 40%, you'll still be okay because you bought the property for cash flow. You're not investing to sell this property or flip it. You're a real estate investor. So what you want to see is a monthly profit. You don't really care about the appreciation. I mean, appreciation is nice. We all want to see property appreciation, but you're buying the property for this positive cash flow. Appreciation is just the icing on the top. Now, the downfall of real estate is that in order to get into real estate, it's a lot more time and it's a lot more capital intensive as opposed to investing in something like stocks. But it can be a great investment opportunity if you understand the game and if you find good deals in your area. Now, if you are concerned about the real estate housing market, I already made a video with my thoughts on the housing market. If you want to watch that video, I'll also link that video for you in the description below. Second, let's talk about investing in stocks, because when you invest in stocks, you are investing in companies that you believe in. So when you invest in McDonald's or Amazon or Lululemon or Chipotle, you become one of the owners of these companies. Now, as McDonald's and Amazon and Lululemon and Chipotle make more money, so do you. Because as their stock price goes up, now you own a piece of the company, and as the stock price goes up, your asset goes up, and now you can sell the stock for a profit. The tricky thing about investing in stocks in 2021, and the concern that a lot of people have, is we're seeing the stock market break new highs. And nobody wants to come in and buy the stock market at a high if then the stock market is going to turn around and crash tomorrow. Now, if that's a question that you've been asking yourself, there's a couple things that I need you to understand. First, I need you to know your strategy, okay? Because when you invest your money in the stock market, you got to understand, are you looking to be a short-term trader, meaning are you trying to buy the stock and sell it within less than a year? Or are you looking to be a long-term investor, meaning you want to buy the stock and now you want to hold on to it for decades into the future? If you want to be a stock market trader, meaning you're looking to buy and sell stocks relatively quickly, make that money in the short term, then what you have to do, especially in 2021, you have to have your risk parameters built in. What that means is you got to know that if your stock turns around, at what point do you sell? This might mean 10% as a loss. And so if you invest in a stock and it comes down 10%, you have to sell. You have to have your risk parameters in place, because the last thing you want to do is now change your strategy as a short-term trader and say, yeah, I wanted to be a short-term trader, but I really think this is a good investment. Well, if you think it's a good investment, then you want to be holding on to it for the long term. If you're just trying to be a short-term trader, you're trying to make money on momentum. You're trying to make money through trends. You're trying to make money as the stock is rallying through the stock market rally. But if you want to be a long-term investor, that's something completely different. And so now if you're trying to be a short-term trader, you have to have your risk parameters in there. You have to know your strategy when you're going in. And this is something you have to stick with. If you're trying to be a long-term investor, then the things you got to be looking for are good undervalued investments. That means you want to find a company that you believe is undervalued. So you're going to look at how much money it's making, how much profit it's making, how fast it's growing, what the future market potential is. And if you find a company that you believe is going to be worth way more in the future, then this is a company that you can come in and buy, because you believe that this company is going to be worth way more in the future. Now, your goal is to own this company for a long time. This might mean 10, 20, 30 years into the future. And now, if you see a market crash happen, let's just say a market crash happens in 6 months. Now, that shouldn't really affect your investment strategy, because you believe in the long-term value of this company. So if something fundamentally does not change with your company, then if a market crash happens, you just want to come in and buy more, because you have time on your side as a long-term investor. And so even if the market does crash, that's okay. You still got time on your side. You have a 30-year horizon. And if the market crash happens, now you come in and you can buy even more. When we're talking about investing your money, the thing that you have to do here is you have to separate the numbers and the financials from the emotions. And this is very hard to do, because everybody talks about money and investments in an emotional way. I mean, just turn on CNBC and everyone's going to be talking about why the stock market is crashing or why the stock market rally cannot be stopped. I mean, it's all in extremes and it's all super fueled by emotion. And so now, if you want to be a long-term investor, you got to put that emotion aside and you got to look at the numbers and you got to understand what's the good value. It is impossible to time the market. Not even Warren Buffett can do that. Nobody knows when a market crash is going to happen or when it's going to be or how long a crash is going to last. I mean, it can happen tomorrow or in 6 months or in a year or in 10 years. I mean, it is impossible for me to know that or anybody to know that. And so you don't want to be in the game of just trying to time the market. What you got to do is you got to understand what your strategy is and how long you want to keep your money in the market. Once you know your strategy and your game in the stock market, now you can invest your money accordingly. Because the mistake that so many people make in the market is they come in with the idea, I'm just going to throw my money in the market with what's hot and my goal is just to make money. And then something happens, the market turns around, your stock goes down, and now you panic sell. And so what ends up happening is you see something kind of go like this. You come in and you buy here because everybody says, oh my God, this stock is going up. I'm making so much money. And so all over here, all of your friends and all of your coworkers have made so much money, and then you come in and buy. And then for a little bit of time, you make a little bit of money and now you're excited. You see your stock in the green. But then for some reason, the stock starts to turn around. Now you're in the red and you start to panic sell, and now you sell here. So you bought high, you sold low. And so you thought you were investing in the stock for the long term because you believed that this stock was the future. And then something happens, it comes down, you see your stock go down 10%, and now you panic and then you sell. Now either the stock could go down more and then maybe go back up, or maybe it goes back up right away. But if you go out, now you just lost money. And so you really got to have your strategy in place before you start buying. You got to know, are you a short-term trader where you're just trying to make money off of trends and momentum? If so, you got to have your risk parameters in place. And if you're trying to make money for the long term, if you're trying to invest for the long term, then you got to understand the underlying value of the company. And if you believe in that, then if this happens, you just come in and buy more. Stocks do have a role to fight against inflation, because if you invest in a company and inflation happens and prices start to go up, grocery prices start to go up, and you invest in a company like Amazon, let's just say, well, then the people that are selling the products on Amazon are going to have to raise the prices of their products, which means Amazon is going to make more money. So as more inflation happens, these companies will eventually be making more money because they're going to have to charge more money to make up for this inflation, which would also kind of raise the revenue numbers and the profit numbers to make up for inflation, which should, in theory, make stock prices go up. And so that's where you got to understand that even if inflation happens, you want to make sure you're on the producer side of the equation, meaning you're owning the companies that are selling the products, not just the person that now has to pay more money to buy products. The way you do that is by owning the means of production, and one of the ways you can do that is by investing in stocks, because now you own the companies that are selling the products. I'm not going to get into the actual how-tos of investing your money into stocks in this video, but if you do want to learn more, you can read our free guide to investing your money in stocks on our website, theminoritymindset.com. So if you want to download that guide, I'll link it for you also in the description below. The last thing that I want to mention about investing your money in stocks is you don't necessarily have to be in the stock picking game to invest in stocks. Another thing that you can do is invest in ETFs. An ETF is essentially a group of stocks. So now instead of you trying to find the hottest tech stock to invest in, you can invest in a tech ETF. Instead of trying to find the biggest company to invest in, you can invest in an ETF that gives you exposure to the top 500 companies in the stock market. And so if you are not interested in trying to find the best stock, if you don't like the idea of doing all the stock market research, if you don't want to keep up with earnings calls and do all that work, look into ETFs. ETFs give you exposure to the stock market without having to do all that work, because now you can invest into a whole basket of companies. The third thing that I want to talk about is investing your money in gold, because this has always been kind of like the traditional hedge against inflation. So gold is something that has real value, because in order to create gold, you have to physically mine gold, and so it takes time and effort and labor to create an ounce of gold versus a dollar that you can print in a fraction of a second. Like it costs like 12 cents to print a $100 bill, and it takes a fraction of a second to do that. So the reason people like talking about owning gold is that when you own gold, you're converting your paper dollars, your kind of funny money in this case, because your paper dollars keep losing value, into something that takes real time, effort, and labor to create. Gold, as opposed to owning bricks and windows with the house. Now you own something physical with gold. The issue with gold is gold doesn't have too much real value. Gold is used in certain industries, but at the end of the day, when you buy gold, it just sits there in a vault and it looks back at you. It doesn't do anything. It doesn't pay you with interest. It doesn't give you dividends. It doesn't pay you with any cash flow. It just sits there. It doesn't produce more value. And so gold is kind of just something that you put in the drawer, hoping that if the market were to collapse and dollars become worthless, now at least you have gold that hopefully people would want then. Gold has been kind of like the international currency for centuries now, and so people always kind of value dollars against the value of gold, and so that's why people believe that if you're worried about inflation, gold is one thing that you can do. But the issue with gold again is that it doesn't create you more value. Now, if you want my personal opinion, gold is a safety net. I mean, this is kind of like something you want to own for worst case scenario type of situations. But I'd rather you worry about building your wealth first. This is something you buy after you built your wealth. And so what I want you to do first is worry about what you need to be buying to build your wealth. Once you do that, then you should be buying some gold. You can kind of think of gold as doomsday insurance. So if the worst case scenario were to happen, that's when gold should have some value, or hopefully would have some value. But before you start worrying about doomsday, let's talk about how you can build some worth today. And number 4, let's talk about cryptocurrency. So Bitcoin, Ethereum, Litecoin. The thing that you need to understand about cryptocurrency is that there's still a lot of speculation about cryptocurrency, and there's still a lot of uncertainty in the future. Now, yes, there's a lot of value behind blockchain. And yeah, there's a very good chance that cryptocurrency is going to have a much bigger part in the future than it does today. But the thing that you need to understand about cryptocurrency is that it is going to have a very volatile future, because it's still very uncertain. I mean, no government wants to lose their power over the people. And what's the thing that the government uses to really control things and have their power over things? Well, the monetary supply. The whole idea behind cryptocurrency is now with cryptocurrency is decentralized. It's not controlled by one central government. And so we're going to see more hurdles and more roadblocks in the future. The thing that I want you to understand is that people that usually end up getting burned is the people that don't understand what they're buying, and it's the people that buy just for the hopes of getting rich quick. Look, there's a good chance that cryptocurrency is going to change the way that we do transactions in the future, kind of like how the internet changed the way that we learn things. But at the same time, cryptocurrency still has risks. And you got to understand that. And so before you jump in and you throw your life savings and now you leverage up your life savings tenfold through the help of easy debt and easy margin, you got to understand the risks. Just because it might be the future doesn't mean you're guaranteed to make a ton of money, okay? Sure, yeah, cryptocurrency could see big booms and it can also see big crashes. And so you got to understand what is going on here, and you want to be investing in cryptocurrency smartly, okay? If you want to be buying cryptocurrency, fine. Just make sure you never invest more than you can lose. It's always scary to see people come in and buy an asset. It doesn't matter what we're talking about. It's always scary to see people come in and buy an asset. And now not only are they buying it, but now they're using debt to help fuel up their investment. And now they're buying this asset, not because they believe in the value of this asset or because they understand this asset, but just because they want to get rich quick. Now, the good thing about cryptocurrency is we're seeing more kind of institutional support. We didn't see that back when the 2017 crypto crash happened, but we're still seeing a lot of people that buy Bitcoin without understanding what Bitcoin is or understanding how Bitcoin works. And so we do have a lot of hype and speculation around cryptocurrency. And so the thing that I want you to understand is just be a smart investor, okay? If you want to put your money in cryptocurrency, cool. But just understand what it is first. Understand your investments. Be a smart investor. Now, look, cryptocurrency can be a good investment. It could also be a bad investment. You got to understand what you're doing, okay? There are established investments out there, real estate, stocks. I want you to also have your money there. Don't just throw all of your money here, especially if you do not understand what you're throwing your money in. I know I just said this, but I want to say it again because I want to make sure you understand this, because the people that end up getting burned the most are the people that come in, and these are the speculators. They get greedy and now they're buying for the sole hopes of getting rich quick. And now you're coming in and you're leveraging up your investments and you don't understand what you're buying or why you're buying it. You're just buying it because everybody else keeps talking about how rich they're getting. And so now you get in, you don't want to miss out on the fun. You got that FOMO, and now you jump in and you buy, thinking that this is going to be the savior that makes you rich in 12 months or less. Okay, I'm gonna say what I said again. Never invest more than you're willing to lose. If you enjoyed this video, here's a video on habits that keep you poor that I think you'll love. And while you're at it, download our free stock market PDF. And as always, keep hustling. This money needs to be saved as soon as possible, because if you do not have $2,000 saved up for an emergency, you are in financial danger.